This is Gabino.
This is Steven,
We're the founders of Sapphire.
and you're watching Taking Stock.
A lighter than expected ADP print today on Wall Street sets the stage for a crucial jobs report tomorrow morning at 8:30 a.m. crossing the wire from the Bureau of Labor Statistics. It'll give us a huge indication of where the economy is and where it goes from here. Welcome to the show. This is Taking Stock. I'm your host today, JD Durkin, live here on the trading floor of the one and only New York Stock Exchange. We are, in fact, just moments away, and I do mean mere moments, friends, from the ringing of the closing bell. The team from Fast Company is here to do the honors, that ADP private payroll, though really driving a lot of the market action today, I would argue, because any sense of weakness in the labor market strengthens the case for the Federal Reserve to cut interest rates on September 17th. And when you get into the conversation of the short end of the yield curve being brought down by the Fed, that's a bit of rocket fuel across equities. We got a lot of buy action into the close here, expected to close for the markets here at session highs. We will see what the tail of the tape has to say in the next 50 seconds or so. Today on the show, who else would I want to talk to right after the bell? The Einstein of Wall Street, Peter Tuchman. He will give us his perspective on the trade volume he saw into the close. Philip Martin of Coinbase is standing by as well. Brendan Vaughn of Fast Company, right off doing the honors, will join us in just a bit. We'll be talking with the CEO of McGraw-Hill and the latest from Money 2020. And with that, my friends, Fast Company is here to do the honors. I always say, Todd, you got to wait for the gavel. Sometimes I start talking a little too early and then the gavels kick in. The team from Fast Company here celebrating its 30th anniversary. They are good friends of ours here at Taking Stock, and we welcome them down here anytime. We'll take a look at the tail of the tape, give you a sense of what investors had in store ahead of tomorrow's crucial jobs report for the month of August, finishing here at session highs. The S&P 500 up 0.8%. The Dow 30 components up 0.7%. The New York Stock Exchange Composite up 0.7. How about the small caps? A further rally here into the close, up 1.2%. And just before we came on, Peter Tuchman came over and said, hey, you got to see the price action that we had at the close. Peter Tuchman joins me now. What did you see here in the last few minutes before the bell, Peter?
You know what, I'm having this really strong feeling that people feel that the runway is clear for the cuts that we're having. We're obviously waiting on some numbers economically tomorrow, but we're seeing large buy programs come in for the closing bell 3 days in a row. 3.5 billion, 1.8 billion, and 1.6 billion, respectively, over the last 3 days. And that gives the market the fuel that it needs to close at record highs here. So, you know, across the board, it's super solid. I think people are putting money to work, which you'll often see in the beginning of the months, whether it's mutual fund allocations or funds across the board, closed-end funds as well. You see people, when they're comfortable, putting their money aside into the market in the beginning of the month, when that's time for allocation, and you see this happen, big buy programs come in on the bell.
You know, it took me a second here to actually realize, you look at the tail of the tape today, 65.02, that's another all-time high close. We just bested last Thursday's close of 65.01.
So there may have been even a little bit of a squeeze there.
Yeah, so as you head into the close, when do you know that buy program's coming in? Is it like 3:55? How close to the tail?
From 2 o'clock until 3:55, you can see what the imbalances are that come into the close if you have a seat here on the New York Stock Exchange. And you'll remember, it's not inside information, it's information. It's a matter of what you do with that information. So as order flow comes in for the closing bell, our largest auctions here at the NYSE are the opening and the close. That's where a lot of people try to embed their order flow and they see a lot of volume. Our largest volume is on the closing bell, and that's what we saw today with a nice sizable. We were small for sale all afternoon, although you saw a bit of a melt up, and then everything flipped to the buy side. Once you've got that runway feeling clear, and 1.4 billion came in to buy, literally about 3-4 minutes before the bell.
Yeah, I don't know about you. I always take the ADP jobs print with a grain of salt because oftentimes it doesn't really tell us what's going to happen the next day.
It usually gets adjusted.
But tomorrow is a big one. August jobs in light of the Jackson Hole comments ahead of the September 17th FOMC meeting. You've been doing this a long time. You've been down here 4 decades, if I'm not mistaken.
Correct.
How important is a jobs piece of data like we'll get tomorrow morning?
You know what? It will be, because we've seen now about 3 or 4 deliveries of economic data that have set the stage after Jackson Hole for that pivot that Jay Powell gave us the other day, right? I mean, that's what we had. And so as that economic data shows us a little bit of weakening, we are starting to see the impact of tariffs. Right? And everybody was hoping we wouldn't do that, but there were two opportunities. One was that we were going to start to see an interruption of the supply chain. Hopefully we're not going to see that much, but we are seeing the economic impact on consumer spending. We saw that numbers came out yesterday. It is impacting people. People are seeing that things are costing more, and then you're going to see, obviously, some of those people are getting pulled out of the labor force in August. I mean, I don't know what tomorrow's number is going to be, but the weaker we see it, the more fuel there is, as you described, on the fire for the Fed to cut rates. How much we're going to cut, we know we're going to get a cut on September 17th. Whether we get a 25 or a 50, we know that hopefully we're going to get as much as 100 coming into the end of the year. And it's not a bad thing, it's a good thing, because the decision by the Fed is an economic data-based decision. Right? It's not that he is kowtowing to the administration, which has been pressuring him for a while to cut rates. It is basically that the table has been set. He unpacked the bag really clearly at Jackson Hole to show us that finally, right, the time is right. There were two dissenting players in the game who decided. Now, he did not want to wait. I spoke about this with Dan Ives the other day. Why did he pivot the way he did? Was two dissenting governors chose to go against him on the last meeting. Yeah. You don't want to come into this next meeting with 3 or 4 dissenting governors. That was the first time since 1983 that we ever had 2 dissenting governors going against the chairman. And if you have more, then you're kind of losing the game. Yeah. The goalpost gets moved, and then you're playing catch up. And so I don't think he wants that. He's done an amazing job, in my opinion, whatever anybody thinks of him, of navigating our way out of COVID. Right? We're in great condition, right? Even in the eyes of so much we've gone on. Look, 2025, I believe, is one of these years where we've seen the market do absolutely everything, and we've navigated our way to the top. Yeah. The higher highs, the lower lows, right? Tariffs, oil, wars, gold, crypto, it's all had its high highs and low lows, yet we're closing at record highs.
Yeah, we certainly
are.
Pretty amazing.
That doesn't happen by accident.
And you're pretty amazing as well. Peter Tuckman, the Einstein of Wall Street, my
always
man.
A pleasure.
Thanks for being here as always. All right, appreciate you, my man. I'll see you tomorrow. Josh, I'm going to hand you that. Todd, let's go for a walk. Time now for my favorite. Now, it's also amazing how many people are just like so eager to get out of here at the end of the workday. You hear the tail of the tape closes. It hits 4:05, especially tonight with the start of the NFL season. No shortage of football fans down here at the New York Stock Exchange. And actually, we get to talk a little bit of football for this next one. Todd, we're going to take a look at 2 New York Stock Exchange notable companies here on the day. How about the first one? This is not a typo, my friends. Look at shares of American Eagle Outfitters. Yes, that is correct, up 37% on the day. The company obviously had that high-profile partnership with Sydney Sweeney, but they also saw a boost in men's sales after a partnership with Travis Kelce earlier this summer as well. UBS has a price target here for the stock at $21.50, suggests a little more upside potential, but you don't have many days. I've been doing this a long time. You don't frequently see a stock go up 37% in a single session. Incredible day for AEO. Todd, we'll head over this way. We'll take a look at Walmart, up 1.5% in the day. A big gap up in shares. 6 consecutive positive sessions for Walmart. The average 1-year price target for the stock right now sits at about $113. Back of napkin mental math tells me that's an upside potential of another 13%. Folks, we got much more Taking Stock coming up after a quick break, and a really exciting package and an interview we're going to toss to you right now that you do not want to miss. Simon Allen is the CEO of McGraw-Hill, and I am very excited to say the man himself is taking time out of his busy schedule to sit down with us here on the trading floor of the New York Stock Exchange. What a pleasure to have you, and thanks for being here.
JD, thank you. Thank you for inviting me. It's lovely to be back here after a month. Remembering ringing the bell, it was a wonderful occasion. It's great to be back again. It's good to see you.
And I have to extend my congratulations, of course, for the company going public right here at the NYSE not long ago. Let's start there. The journey of this as a standalone, publicly traded company. What did that look like?
It's a wonderful transition for us, and it really is something we felt we deserved to do. We deserved to be public. We were told that by all of our investors as well. We've had a great experience with Platinum Equity. We were private equity owned by them for, it's now been 4 years. We've more than doubled our growth, our business, our profitability has more than doubled since that time. They've helped us a lot with making sure that we're running a very efficient, growth-oriented, purely digital company now. That's what we are. We focus on the education market, as you know, and for the last 137 years, we've built up a tremendous respect and knowledge and just reliance and trust in the company. But for the last 10 years, we've completely transformed it now to a digital solutions company, and that's where our growth is going to be, shifting all of our wonderful courseware online, making sure that students are learning in the best way possible to keep them engaged and make it a personalized learning process for all of the age ranges we cover.
Of course, Simon, in that last decade, we did have the COVID pandemic, and in the world of business and the financial markets writ large, we continue to say the pandemic tend to have this accelerating effect. Change that was already underway really was aggressively moved forward across the entire world. Is that part of what happened with your company for people like me who have such a relationship with the brand from our childhood? Because it sounds like the last decade has really brought a lot to the table for you.
You're right, it certainly was an accelerant, but what's critical with this is that it's sustained. It's continued. It's not one of those situations where COVID accelerated a particular pattern and then it went back to another way. For us as a company now, we are by far, for example, higher education is 92% digital, and that's only going to go and continue to go up. Our K-12 business, you still have some print material in K-5 for the younger children, but the vast majority of that business is digitally enabled. All of our growth-oriented, the products we create are driven by AI, which is a big tailwind for us, giving us the chance to be more directly related to every student that we cover and helping the education community. So COVID accelerated that, but now it's absolutely continued to pace since then, and it will always continue in this growth trajectory.
I know you've been with this company for quite some time.
Yes.
What do you feel that now as a standalone, publicly traded entity, the company is able to do now, maybe that you couldn't not quite do previously?
That's a good one. I mean, for us, a lot of the growth is clearly around looking at the proceeds from the IPO. We're making sure we're bringing down our debt levels, and we've said publicly we want to get that down to 2.5 over time, and we shall. It gives us a chance to reinvest back into the business with far more innovative products and solutions that we're providing for students. Products like Alex Calculus that we're doing for the more advanced level students learning calc. And at the other spectrum, Alex Adventure for K through 5, both for math learners again. Products like Sharpen that we're doing for that student that really wants to learn like they used to do with TikTok. And now we embed that with their courseware material. So the innovations and the investments that we're making, all based on AI material, gives us much more strength and ownership of our future growth. It's very exciting for us, Jake.
Stay there for the screen.
All right, folks, let's do it. Welcome back to the show. This is Taking Stock. Bringing you a quick update on a few of the major crypto giants that we follow very closely. Both down in negative territory today. The broader risk-on mentality across Wall Street not really working its way to the crypto majors. ETH at 42.92, sliding in the session about 3.7%. As for Bitcoin, kind of a comparable story, down 1.4% to just under 111,000. Time now to bring in Philip Martin. He is the Chief Security Officer at Coinbase. Been looking forward to this conversation. Philip, really grateful for your time. Talk to me first and foremost about some of the most important steps that you would advise someone who wants to get into the crypto game, wants to buy, wants to hold, maybe doesn't quite know where to begin. From a lens of safety and security, Philip, what do you tell that investor?
Carefully with diligence. There, you have a number of options, both in the U.S. and globally. But pick that partner. Make sure that partner has the capabilities.
I'm sorry? Talk to Adrian. Okay, unfortunately, we're going to try and get Philip Martin. He is the Chief Security Officer at Coinbase. We're going to work to get his shot back up. But in the meantime, you may have seen a few days ago, I sat down with the one and only Adrian Grenier. He is an actor. He is an entrepreneur. He is a producer. He is also an investor, specifically in the world of cryptocurrency. Here now is part 2 of our sit down with Adrian Grenier.
We're here at AT&T Stadium in Arlington, Texas to celebrate the launch of NYSE Texas. And I'm joined now by 2 gentlemen perfect for that celebration. Jay Allison, he's the chairman and CEO of Comstock Resources, and Jerry Jones, owner, president, and general manager of the Dallas Cowboys. Gentlemen, welcome. And Jerry, you invested in that energy, a big investment in Comstock in 2018. What was behind that?
Well, there really is a great similarity between the story of how we became involved with the Cowboys and how we became involved with Comstock. In both cases, the best success I've enjoyed was when you went the other way from the common thinking. Almost every time that I can point to it, very few people were coming the Cowboy way in 1989, and I'm talking about not on the field, but off the field. The Cowboys were losing $1 million a month. I bought 15% of the Cowboys from the FDIC. They'd been foreclosed on. Control of the Cowboys was going to the courthouse to be auctioned off. That's the shape of, if you will, football at the time, and I'm not exaggerating, and certainly the Dallas Cowboys. Now, I didn't have to mess with the FDIC to get involved with Comstock at all. But what you did see was a less than enthusiastic involvement in hydrocarbons. You had so much interest in, okay, we're going to go to renewables. Yet we all recognized, at least I did, that we're going to need energy. This country has to run on energy. And so I looked at first of all, I looked at Comstock from the standpoint of their management. Their management is one of the soundest, highest character managements of any team, or that team out, but of any company. That's critical, because when you're in an intangible, when you are talking about what really only God knows, that's what's down there at 20,000 feet in our particular case, the integrity of the management, the integrity of all the people involved has everything to do with where you put your dollar.
Finally, gentlemen, NYSC Texas here today at AT&T Stadium, the home of the Dallas Cowboys, to celebrate this new fully electronic equities exchange. What does this mean for the state of Texas?
Well, let me say this. We talk about AI. Without AT&T and their ability to deliver it to this country, okay? And AT&T is an American company. Their main competition is not. They're an American company. It's the reason that I wanted our stadium to be named AT&T. Alexander Graham Bell. It's about America. So we're so proud not only to be a part of AT&T and have been, but we're a part that the Texas New York Stock Exchange is kicking off in AT&T Stadium. It's very appropriate. They've had an amazing turnaround under John Stanky over the last really several years, but really manifests itself over the last 6 months. And so I'll tell you right now, I do believe in osmosis, sticking next to and rubbing off on success. So I'm gonna rub on John Stanky today when I see him. They're celebrating AT&T being a part of the inaugural kickoff of the Texas New York Stock Exchange.
That is definitely some good vibes to go around.
Yes.
Indeed, a winning mixture indeed.
Yes.
Gentlemen, it's an honor to be with you here today and to celebrate NYSC Texas together.
Great.
Incredible.
Thank you.
Thank you for always hosting us. You do a fabulous job.
It's my honor. Thank you so much. Jay Allison.
We're so back. Welcome back to the show. This is Taking Stock. We are still live down here on the trading floor of the New York Stock Exchange. And I love this portion of the show because not only do we talk with fascinating and interesting guests, even better when the guest just rang the closing bell himself. Brendan Vaughn is the editor-in-chief at Fast Company. He and his team did the honors for a 30-year anniversary for Fast Company. Is that right?
Yeah, that's right. We've been around since November 1995.
Wow, congratulations. First
Thank
of all,
you.
I always love asking people, what was the experience like to be up there on the podium to do this today?
It was way more, you probably hear this, it was way more kind of intense than I expected. I don't know why exactly, I'm not sure what I expected, but just being up there, looking out across this place, seeing our logo everywhere, that was kind of overwhelming and awesome. Yeah, it was great.
That's awesome. Talk to me about the evolution, really what you feel like the brand stands for 30 years later. I got to imagine there's a lot of ways where you feel it's still very much its original core product.
Yes.
But we are in the space of evolution. Things change inherently over the time.
Of course.
How would you say Fast Company is the same 3 decades later, and in what ways has it evolved?
It's the same in that it's about this kind of new way of thinking about the relationship between an individual and what they do for a living. That was kind of the core of there's a few things at the core of the launch. That was one of the main ones. Another one that is the North Star editorially of the brand back 30 years ago and still today. Innovation. We focus on innovation in business relentlessly. That's what we focus on. The brilliance of that is that that was a unique, and still is a unique position in the business press to be laser focused on innovation. It's also endlessly renewable because there is always new stuff to cover. And right now it's AI. So for the last couple of years, we've just been sort of not exclusively focused on AI, but we've certainly done a lot of AI coverage.
It'd be hard to cover business today and like
you would not be doing your job very well, would you? No.
Yeah, of course. What do you think makes a really innovative company? Because you do put such a spotlight on innovation and brands. Who are some of the companies, or at least what are their shared traits that you think really make them stand out? I know Fast Company does these annual lists to spotlight some of the big movers and shakers.
Right.
What are those general themes you see pop up for the most successful names in business?
I would say just a singular vision that is that is felt like in the gut of the founders, and nowadays everybody's using a lot of data to make their decisions, but they're also using a lot of instinct, and that's still a hugely important thing. Always has been, always will be, no matter how much data we have.
Yeah, absolutely. What more would you want people to know about where Fast Company is today, and maybe where you hope or maybe expect the brand to still be in even just the next few years?
Right now, one thing I'd love people to know about is that our Innovation Festival, which is our flagship event, which we do every year downtown Manhattan, where we are right now, is happening in just a couple weeks. Starts September 15th. It's our 11th annual Innovation Festival. Leaders, creators, innovators from around the world get together, talk to each other across their industries, look for common connection about what they do and what they can learn from each other. So that's a huge part of what we do, always been a huge part of what we do. Just more of what we've always been delivering to our readers. We are very steady. That is based on our founder's vision, which holds true today. We're always reinventing ourselves, but we always stay true to ourselves.
That's awesome. I'm really grateful you're on the show today. I don't wish your football team, the Washington Commanders, that much success against my beloved Giants on Sunday.
All right.
Great to have you on the show. Folks, stick around. We're going to take a quick break, and on the other side, you'll hear the latest from Scarlett Sieber at Money 2020. Much more Taking Stock is coming up after this.
Hello, I'm Scarlett Sieber from Money 2020, and on today's segment of Hindsight 2020, we rewind the clock back by 2 years. On August 24th, 2023, Better.com, the digital mortgage platform with big dreams and an even bigger name, officially went public. They did it via a SPAC merger. Think of a SPAC like a blank check company. It's a shell that goes public first, raises a pile of cash, and then merges with a private company to take that company public. It's basically a shortcut to the stock market, skipping the long traditional IPO process. If an IPO is like building your own fancy house from scratch, a SPAC is like moving into a house someone else already built and just repainting the walls with your company's name. SPACs were all the rage back in the early 2020s, if that's even a thing. In 2021, SPACs peaked with 613 IPOs, making up a whopping 63% of all US IPOs that year. Back to Better. This SPAC stepped onto the floor under the ticker BETR, as in Better, which is a confident choice in an industry that usually plays it safe with names like First National Consolidated Lending of America. This deal brought in $556 million capital boost, including a $528 million convertible note. That's a serious stack of cash for scaling, expanding their products, and maybe making the mortgage process slightly less soul-crushing. If you have been there, you know what I'm talking about. Let's go back to day one. We got to talk about this. The stock price took a steep drop, over 90% in early trading. Headlines called it grim and painful. But here's the thing, Better.com wasn't built for one day. It was built for the long game. By the time they hit the public markets, they'd already cut operating expenses by 80% year over year, streamlining operations, focusing on tech-first solutions that the industry did not see coming at the time, like the one-day mortgage, and setting themselves up for what growth looked like when the housing market rebounded. First half of 2023 revenue came in at $51 million. Yes, they posted losses, $135 million net and $82.8 million adjusted EBITDA, but that's before the IPO war chest and the leaner business model could kick into high gear. So if you judged August 24th only by the stock chart, you might think this was the end of the story. But zoom out and it looks much more like chapter one of a comeback. Because here's the thing about the mortgage market, it's cyclical. It always comes back. And now Better.com's got the tech, the team, and the capital to ride that rebound. August 24th, 2023, Better.com takes the leap. A rocky landing, sure, but sometimes the best business stories start with a plot twist. And when your ticker says BETR or Better, you're basically daring the market to bet against you. Do you have any questions about the Better business model or have an iconic date in history that you want to see profiled with us? Drop it in the comments below, and until next time, back over to the one, the only JD Durkin.
Let's do it, folks. On the eve of what promises to be one of, if not the single biggest piece of jobs data we get all of 2025 tomorrow morning, 8:30 a.m., the Bureau of Labor Statistics, August jobs. After a bit of a disappointment to the downside for ADP print today, all of Wall Street, investors, retail, institutional, you name it, we're watching to see what the jobs number has to bring. Tomorrow morning, 9 a.m., NYSC TV Live and FinTech TV, they both count you down to the open. That's going to do it. This is Taking Stock. That's the New York Stock Exchange. We got Birds Cowboys tonight in prime time. The season is here. We'll see you again tomorrow. Woo!